As Bitcoin hovers near its all-time highs and markets brace for tomorrow's US CPI announcement, on-chain data reveals that major whales are quietly rotating into select mid-cap altcoins, ramping up positions in 1-inch. Chainlink curve, DAO, and the Memecoin index. SPX 6900. Their actions suggest a growing conviction that favorable inflation prints could reignite risk appetite. But the same positioning also exposes these assets to the volatility that often accompanies macro surprises. In the past week, 1-inch 1INCH saw its whale holdings swell by 5.65%, lifting top wallet balances to 9.56 million tokens. Despite a slight dip in concentration, 100 largest addresses now control 1.26 billion 1INCH. Down fractionally, this reflects redistribution rather than liquidation. The accumulating wallets began increasing their balances just after midday on July 14th, even as 1INCH traded between 32 cents and 34 cents. Spot and institutional holdings remained largely unchanged, underscoring that this movement is driven by whales positioning for higher on-chain DEX activity rather than short-term profit-taking. Yet the price of 1INCH fell nearly 8% in the same period, hinting that those whales may be positioning ahead of an expected spike in DEX vol and possibly anticipating a CPI-driven risk on swing rather than relying on immediate capital gains. This dynamic poses an opportunity. If the CPI print underwhelms or aligns with dovish expectations, traders could flock to 1-inch DEX aggregators in droves, rewarding early whale accumulation. But the risk is stark. A hotter than expected CPI could ignite market-wide deleveraging, leaving 1INCH holders underwater as DEX volumes retract. Chainlink has similarly captured whale attention. Since July 10th, top wallets have added 6.19% more Link now, totaling 2.84 million tokens. With the most significant inflows between July 11th and 12th, just before Link rallied to a local high near $16, the 100 largest addresses collectively hold 654.73 million Link, a modest uptick that, combined with a 1.51% drop in exchange reserves, suggests a deliberate shift from exchanges to self-custody. Over the past week, Link's price climbed almost 18%, signaling that whales are confident in Chainlink's continued relevance as the oracle backbone for DeFi and emerging cross-chain applications. The upside here hinges on the narrative that rising on-chain usage and institutional smart contract adoption will drive Link's intrinsic demand. However, if tomorrow's CPI reading triggers a broad market pullback, staking and derivatives volume could evaporate, leaving Link's short-term momentum exposed. Moreover, competition from other Oracle projects could dent Chainlink's dominance if developers pivot to cheaper or faster alternatives. Undermining the bullish thesis, Curve DAO token CRV has not escaped whale scrutiny either. Active whale addresses boosted their CRV balances by 1.65%, lifting total whale holdings to 6.18 million tokens. While this increase may seem modest, it occurred steadily over 24 hours and coincided with CRV's price bumped to 71 cents, near 7% gain. The top 100 addresses saw a slight 0.06% rise, signaling that top-tier investors are gradually adding to their positions. Curve's value proposition as the premier stablecoin exchange with ultra-tight slippage and deep liquidity is particularly enticing ahead of an inflation report. CPI data disappoints. Stablecoin trading could surge as investors seek safe haven on-chain liquidity. It's benefiting CRV's fee burn and governance mechanisms. Yet, Curve faces mounting competition from emerging DEXs offering flexible pools and yield farming incentives. Whales accumulating CRV are banking on Curve maintaining its edge in stablecoin swaps. But a shift to alternative protocols or a sudden drop in on-chain stablecoin volume would undermine CRV's performance and leave these large positions vulnerable. Intriguingly, whales are also dabbling in Memecoins as evidenced by SPX 6900, the unofficial alt sector index token. Whale balances of SPX 6900 rose 1.1%, while the top 100 addresses added 4.63% more tokens over the week. Although the absolute scale is smaller compared to blue-chip altcoins, this flow underscores speculative appetite for a potential Memecoin revival. SPX rallied toward $1.60, with coordinated inflows between July 10th and 13th suggesting traders hope a dovish CPI print could spark renewed Memecoin mania. The opportunity here is clear. A surprise CPI miss could unleash a wave of risk-on fervor. That fuels parabolic Memecoin rallies, rewarding early SPX holders across the board. Conversely, a hawkish surprise would almost certainly crush speculative froth, triggering sharp liquidations in highly leveraged Memecoin positions and leaving SPX holders scrambling to cut losses. Beyond these specific tokens, the broader macro backdrop warrants close attention. The US CPI release is expected to show moderate inflation enough to satisfy markets that price tightening cycles are winding down, but not so high as to resurrect Fed hawkishness. If that balance holds, liquidity will flow back into risk assets and whales accumulation strategies for 1INCH. Link, CRV, and SPX could pay off handsomely. Yet, the very anticipation of a stable CPI reading can breed complacency. Market participants who buy into these altcoins solely based on macro expectations may overlook idiosyncratic risks unique to each project, from smart contract exploits to protocol governance failures. At the same time, on-chain signals reveal a nuanced narrative of supply and demand, while whale outflows from exchanges portend a supply crunch. Decreased daily transaction volumes across Ethereum and other chains suggest that demand may not accelerate sufficiently to maintain sharp upside moves. Traders should watch for divergences between whale accumulation and retail activity. If retail participation lags, prices could plateau or even decline as whales eventually realize profits. Furthermore, correlation matrices often show altcoins regaining strength only after Bitcoin stabilizes. Thus, a sudden BTC correction following a hawkish CPI surprise could derail altcoin rallies despite robust whale accumulation. Risk management in this environment demands agility. Allocators should consider scaled entries at key support levels such as 30 cents for 1INCH, $14 for Link, 65 cents for CRV, and $1.45 for SPX to capture whales' accumulation ranges while minimizing exposure to downside spikes. Stop-loss orders slightly below those levels could cap losses in the event of a sell the news reaction. Meanwhile, traders with higher risk tolerance might employ option strategies, such as long call spreads, and these tokens to benefit from upside while limiting capital at risk. As for longer-term implications, whales positioning ahead of CPI suggests a maturing altcoin market that increasingly treats mid-cap tokens as part of a broader portfolio strategy rather than pure plays on speculation. If institutional interest extends beyond Bitcoin and Ethereum into 1INCH, Link, and CRV, it could catalyze a deeper integration of altcoins into mainstream asset allocation. Yet regulatory clarity, or lack thereof, around these smaller tokens could hamper such adoption as compliance teams grapple with securities laws and custodial requirements. The evolving legal landscape in the US and EU may either accelerate or constrain whales' ability to hold these altcoins on-chain without triggering additional oversight. Ultimately, the convergence of on-chain whale accumulation and the impending CPI release sets up a high-stakes scenario for top-cap altcoins. If inflation data undercuts hawkish expectations and keeps real yields subdued, risk appetite may surge and validate whales' bullish positioning in 1INCH Link, CRV, SPX. But if CPI surprises to the upside, revealing stickier inflation liquidity, could withdraw abruptly, sparking sell-offs across the altcoin spectrum and inflicting swift losses on even the largest whale wallets. In this finely balanced landscape, prudent traders will heed both opportunity and risk, calibrating their strategies to the evolving macro and on-chain signals. The coming 48 hours promise to be a decisive moment for altcoin markets, one where whales' heavy bets meet the ultimate test of inflation's impact on crypto sentiment.